Internal Revenue Service IRS tax news. IRS reminds taxpayers to make final estimated tax payments for 2020. IR 2021-13, January 14th, 2021, Washington. Taxpayers who paid too little tax during 2020 can still avoid a tax time bill and possible penalties by making a quarterly estimated tax payment now directly to the Internal Revenue Service. So obviously, if you have income that's not subject to withholdings, for example, if you're a W-2 employee, then you will have withholdings and you'll be forced to basically pay your estimated taxes, and your employer will take it directly out of the wages. And that's why most of the time, if you only have W-2 wages, usually sufficient amount will be taken out so that you're going to get a small refund. The point of that being to avoid penalties and interest, whereas if you paid too little, then you might be subject to penalties and interest because the IRS wants to get paid during the year in which you earn the money, not basically at the end of the year when you file the taxes. So therefore, in 2020, they want to get paid in 2020 rather than in 2021 when you're actually going to file the tax return. Now, if you have some kind of income that's not subject to withholdings, and many more people may have that type of income this year because of the disruptions that have occurred, some people might not be working as much on their W-2 income and might have gone to some gig work or some other kind of job and have some kind of business income, which they will have to then report on a Schedule C. And the first time you do that, oftentimes it's a shock to some people because they realize that obviously they didn't have the withholdings of the taxes at the point in time that they file their tax return, and they have the Schedule C type of income because at that point it may be the case that you have to actually make estimated payments due to the fact that you don't have an employer taking the money out of the W-2 wages. So usually you have to do that quarterly. The fourth quarter payment then would typically be due in the next year. So the fourth quarter payment for 2020 would typically be due in January of 2021. So they're saying, hey, you could still make an estimated payment here, and then you can lower the amount of tax bill that you might have, that you would owe, and possibly the real reason you might want to do it, of course, is to reduce the amount of penalties and interest that can accumulate if you don't pay the IRS basically on time. Okay, so the deadline for making a payment for the fourth quarter of 2020 is Friday, January 15th, 2021. Income taxes are pay as you go. There's a link to pay as you go here if you want more information about that. This means that by law, taxpayers are required to pay most of their taxes during the year as income is received. There are two ways to do this. So that they're basically saying, hey, you got to pay us when you earn the money. So in 2020, we want you to pay us in 2020, even though you really don't know how much you owe us until you do the actual tax return in 2021. This is, of course, a problem because ideally, what we would like to do here is basically have a nice, easy, flat type of tax, an easy calculatable tax that we can then simply pay during the year. And then your tax return, your Form 1040 at the end of the year that you would file in 2021, the year after the tax year had ended, would just be an information return. It would say, hey, look, this is a verification of how much I earned, how much tax I owed, and I already paid it, so we're good. But you can't do that because obviously it's too complex. The tax code is too complex for us to actually get the tax payment correct, as we can do with other types of taxes like payroll taxes and whatnot. That's basically how payroll taxes work. The quarterly tax payments just being a double check, a verification, rather than something that's going to shore up the thing that's not due, right? Have a refund or an amount due. For income taxes, we then have to make estimates. And when we make the estimates, then we typically want to shoot for a little bit over, or we want to be in that safe harbor period so that we don't owe penalties and interest in addition to the actual taxes that we would owe for the federal income tax. So that's going to be kind of our goal. Obviously, for most people, the way that happens is they get withholdings from their W-2 wages, which used to be a little bit easier because we had more situations where we had one income households and the tax code may have been a little bit more simplified in the past. Now, we often have multiple income households, and we often have people working multiple jobs and multiple people working in a household, and they might have other work like gig work and whatnot and have other sources of income. Therefore, the complexity of calculation of the withholdings and the payments can be a little bit confusing. So in any case, how do we pay the IRS during the year then? How would we have paid them in 2020? to pay them for our taxes. So we have withholdings from paychecks, pension payments, Social Security benefits, or certain other government payments, including unemployment compensation in some cases. This is how most people pay most of their tax. And then we can have making quarterly payments, estimated tax payments throughout the year to the IRS. Self-employed people and investors, among others, often pay tax this way. So more people may be subject to this year, again, due to the fact of the disruption of people might have been moving from a W-2 type job to pick up other kind of work where they might get paid as, say, a contractor or a self-employed business where they're not going to be having anybody withhold their wages, and therefore you got to think about whether or not you need these estimated tax payments to be made. So either method can help avoid a surprise tax bill at tax time and the accompanying penalties that often apply. If a taxpayer failed to make required quarterly estimated tax payments earlier in the year, making a payment to cover these missed payments as soon as possible will usually lessen and may even eliminate any possible penalties. So that's really the goal here. Obviously, we don't want a tax surprise and to owe money when, when we do our taxes. But what we really don't want to have happen is for us to have to pay the IRS more than we otherwise would have. You can't really get away from the legal bill that you have to pay based on the income that you have, because you got to pay your tax. That's fine. What you want to not have to pay is the amount over and above penalties and interest, the amount that you're legally required to pay. And that's why you want to pay on time. You're going to basically avoid that from happening. So the IRS recommends that everyone check their possible tax liability by using the IRS Tax Withholding Estimator. There's a link to the IRS Tax Withholding Estimator here. This thing is pretty good these days. It's kind of like software now. So you can put your information in. You can have your multiple wage sources that you can put into the estimator here, and it can kind of estimate what your withholding should be, either if you have a W-2 withholding or possibly help you with your estimated tax payments if you have to make the estimated tax payments. Good tool. It's almost like tax software to do a projection with. So the online tool allows taxpayers to see if they are withholding the right amount and find out if they need to make an estimated tax payment. Form 1040-ES, there's a link to that here, available on irs.gov, includes a worksheet for figuring the right amount to pay as well. This is especially important for anyone who owed taxes when they filed their 2019 tax return. Now, many people may have filed their 2019 tax returns a little bit later because they pushed out the original deadline from April 15th out. However, the extended deadline was still October 15th. But if you filed your 2019 tax return, usually we look at 2019, the prior year, to determine, kind of help us to figure out what our estimated tax payments or if any adjustments need to be made for the following year. In this case, that would be 2020. Obviously, 2019 could look a whole lot different than 2020 as well. So you got a lot of people so your first check then is to look at 2019. Did you owe taxes in 2019? If you did, then you probably want to look at the estimator and see if you can up the withholdings in some way to avoid owing taxes at this point. And then if you, even if you did not owe taxes in 2019 and your circumstances completely changed in 2020, which will be the case for many people, then you might want to use the tax withholding estimator to kind of figure the proper withholdings out. So taxpayers in this situation may include those who itemized in the past, two-wage earner household employees with non-wage sources of income, and those with complex tax situations. So if you have obviously two incomes in the house, that can confuse things. If you have a change of employment, that can confuse things. If you go from a W-2 type of job, or someone in your household does, to something like a sole proprietorship income, that can confuse things. A dependent, new baby, that could confuse things, as well as marriage or divorce, which could change things significantly as well. If any of those things happen, you probably want to use the estimator to check things out, because your prior year tax return is not going to give you a good baseline in those situations, most likely. So taxpayers who owe taxes when they last filed and who did not adjust their 2020 withholdings may find that they owe taxes again, and even penalties when they file their 2020 return next year. Making quarterly estimated tax payments now can help. Taxpayers should know Most income is taxable, so taxpayers should gather income documents such as Forms W-2 from employers, Forms 1099 from banks and other payers, and records of virtual currencies. There's a link to virtual currencies here, or other income. This also includes employment income, refund interest, and income from the gig economy. So if you're involved in the gig economy, there's a link to that here if you want to get more information about it. Unemployment compensation is taxable income. There's a link to unemployment compensation, so many more people are going to be, getting unemployment compensation. It is something that you have to include in income. You should get documentation about the unemployment from typically the state that you would then have to include in income. You can request withholdings from the unemployment income as well. If you receive unemployment compensation and the state did not withhold federal income taxes, an estimated tax payment should be made. In addition, various financial transactions, especially late in the year, can often have an unexpected tax impact. Examples include year-end and holiday bonuses, stock dividends, capital gain distributions from mutual funds and stock bonds, virtual currency, real estate, or other property sold at a profit. So oftentimes things happen at the end of the year, such as bonuses, which can completely mess up. Your income can go up a lot on a bonus. Stock dividends could have a problem because at year-end time, there might have adjustments and have more stock dividends than otherwise would have been thought. And any kind of sales that take place, if you make any sales possibly towards the end of the year, picking up some money or something like that for Christmas time or something, then when you have those sales, you might have capital gains related to them, which again could skew what your tax withholdings would need to be. So publication 505, there's a link to that publication here. Tax withholding and estimated tax has additional details, including worksheets and examples that can be especially helpful to those who have dividend or capital gain income, owe alternative minimum tax or self-employment tax, or have other special situations. The fastest and easiest ways to make an estimated tax payment is to do so electronically using Irs Direct Pay. There's a link to that here. The IRS To Go app. There's a link to that here. Or the Treasury Department's Electronic Federal Tax Payment System, the EFTPS. There's a link to that here. For information on other payment options, visit irs.gov/payments. There's a link to that here. If paying by check, be sure to make the check payable to the United States Treasury. Now, obviously, when you're getting a refund from the IRS, like if you file your tax return and you want a refund from the IRS, electronically filing is really a good thing to do at that point, because the paper filing's taken kind of a long time to process these days, and the check being actually issued by check takes a longer process as well, as opposed to direct deposit. Now, just pointing out, though, the fact that, like, if you file the tax return and you owe money, and then, the direct deposit might not be as big a deal to you, right? As long as you avoid the penalties and interest. Just like, so it's probably the easiest thing to do to pay them with direct pay or one of these kind of electronic situations. But again, if you're receiving the money, then you're obviously concerned on receiving it faster. If you're paying the money, your big concern is to avoid penalties and interest. Now, the other thing that's great about paying them and using these tools is that you can get verification of the payment faster than if you send it in like by check. But just saying, like, if you send it in by check and you do it on time and everything, and you don't have the penalties and interest applied to it, then these direct payments may not be as much of a concern to you as they would be if you're trying to get a refund and you need the refund to pay out down some bills and whatnot, where you want it deposited into your checking account like immediately. Okay. So, though it's too early to file a 2020 return, it's never too early to get ready for the tax filing season ahead. For more tips and resources, check out the Get Ready page on irs.gov. There's a link to the Get Ready page here. There'll be a link to this in the description.